think the future for green bonds and social impact bonds is only growth. If we think about 5 years ago, green bonds were really just concepts, things that people had thought about would be a good idea but never really put into practice. And what we've seen over the last few years is just an explosion of focus on green bonds, financial institutions looking to build them, even corporates looking to issue green bonds.
On the back of the Paris Agreement, we've really seen the corporate world fill the void of a lack of regulation and political uncertainty in how to deal with climate change. And basically investors have come in and said, we believe that we need to align ourselves to a 2-degree world. We also believe there's significant risks in not aligning our portfolio to a 2-degree world.
Green finance is important because it fills a gap. In order for us to make the transitions we need to make, we need capital, and it's a mechanism that enables the financial institutions to get on board with the gap, but also, more importantly, probably manage long-term risk.
They're also issuing green bonds because they're seeing a diversification of their investor base. They're seeing new investors come on board that specifically invest in ESG products.
The reason there's been so much growth in the green bond market is we're seeing financial institutions really want to enter the marketplace. This competitive context about being first to market is something that's really driving the initial stage of growth. Plus there's been demand. Most of the green bonds that have been issued have been oversupplied, and so we're looking to find that mechanism that enables more investments to get out. And what we're actually finding now is that the only real inhibitor of growth is actually getting projects off the ground. Once capital requirements start to really flow, it is going to explode, and financial institutions recognise that they need to build their capability in this space. They need to start to understand what it takes to actually issue green bonds in the right way, put infrastructure in place to be able to monitor and manage these types of assets, and most financial institutions recognise that they want to be ahead of that curve in order to take competitive advantage. For those of us that believe that climate change exists, then the longer term risks are what really is important to manage here, and building that portfolio out and changing your portfolio takes time. So part of the process of green bonds will enable companies and financial institutions to make that step change in relation to risk and still deliver returns. And this context of delivering social and environmental outcomes whilst delivering financial returns is really going to help with the longevity of the response.
So the question to us is really, why wouldn't you invest in a green bond over a vanilla bond when the benefits are additional and there aren't additional costs?
One of the benefits of green bonds, and if we think of a further expansion of green bonds into impact bonds and social impact bonds, is it is also creating real impact in the world and actually making a difference to communities in which these investments have been geared towards. One of the things from the bond market, if it starts to result in more capital flowing into green and social outcomes, we're going to see some real changes across things like the Sustainable Development Goals and actually governments seeking to achieve social and environmental outcomes that are also delivering financial returns. What's really critical for the green bond market as it starts to expand is there's going to need to be real trust in the market. Investors are going to need to feel that there's confidence in what they're investing in, and that's where EY has a part to play. One, because we feel like it's part of building a better working world and actually delivering on that purpose. Another is that we bring integrity and trust to capital markets. And as these things start to transition to and more effort is put into green bonds, then we have a part to play in delivering against that purpose.
I mean, our traditional role is to provide verification services, but we also find that we provide thought leadership pieces and get people involved in the market.
So what does the future hold for green bonds? I would say one thing, growth, but I'd also say an expansion of the types of products. We're going to see more financial institutions gaining traction in the green bond market. We're going to see expansion in regions, more focus within Asia, in Australia, but even Europe and the US coming on board to really drive that capital growth.